Democratising finance. Now, we're gonna go very deep. That's very deep. Our guest speaker is going to be Mr.Abhishek Singh, and he's coming from Comdex. So, Mr. Abhishek, where are you?
Hi everyone, great to see a very, very nice turnout here. So we are Comdex, we started with commodity decentralized exchange, and now, we started in 2018 and we're going to work for over 3 years to, finally zero down on a synthetics protocol. We are built on the Cosmos SDK, the aim is to enable retail traders to take exposure to commodities using crypto assets. Very, very straightforward, it's a simple over-collateralization model like Naked Eye, where you can over-collateralize, use Atom, XPRD, Comdex tokens to create commodity synthetics. Now, for people who don't know synthetics, it's think of it like a perpetual future for gold, silver, oil, where there's no rollover. There's just taking price exposure to these synthetic assets, which replicate prices of commodities. If you see the commodity market of recently, given the geopolitical tensions around, all the commodities have soared heavily, and no crypto user has been able to, take exposure to them. The reason is none of the exchanges, etc., provide any exposure to commodity assets. During a bear market, all of us just run and just buy stable tokens. And this way, in a bear market, there's nothing to make a return on. But with Comdex, you would be able to, take exposure to commodities, synthetics, and commodities historically has been a very inflation-resistant asset class. We have ecosystem of solutions, both for institutional traders. So if there are institutional traders around and you do cross-border trading, you are well aware of all the settlement problems that you face, with banks, with the SWIFT payment system taking 3, 4, 5 business days to do settlement. We have a retail product which is primarily to take exposure, like I said, using Cosmos tokens, just get commodity tokens. We work, the chain is a very generic protocol where, we actually have real world NFTs. It's not to say anything against different projects, but all our NFTs actually represent real world assets which can be tracked to the actual shipment that the commodity is located at. All these assets can then be used to get better trade financing from financiers who are looking for greater transparency in the ecosystem, especially when there is a huge lack of trust when you're doing cross-border trading. Derivatives is the one that I just explained, and then to obviously facilitate all of this P2P trading or AMM-based trading, we have both kinds of DEXs, where it has a Uniswap kind of pool which has commodity tokens with the CMDX token, as well as a P2P exchange which is more for the institutional traders to deal 1:1 with their counterparties. It's all plug and play, so institutions can get onboarded in as quickly as 2 days because of the KYC AML checks. The retailers can just log into the app, connect the Kepler wallet, and start trading in 5 minutes. Enterprise trading, commodity synthetics. ShipFi is something which is in the roadmap where LP interest of funds can be tokenized and a secondary market for funds can be created. So LPs of big funds can actually create a secondary market where retailers like us can get access to funds which we never had access to before. Imagine all the trade financing that happens across the world. As retailers, we get to buy mutual funds or debt instruments, but we never get to buy real estate funds or when you just want to take a speculative position on such funds and get retail access to this using your own crypto tokens, by the way. So this platform would enable tokenization of funds, fractionalizing that fund so that retailers can take access to it. For funds, they get a greater benefit because if an LP wants to exit, it provides all the retailers to kind of become the LP, in the fund without, going through all the process of, minimum of 250K investments and things like that. Even with $1, you could technically take exposure to funds that you could not do before. So this is the primary aim of Comdex, to democratize finance, where all retailers get access to investment instruments that they never had access to before. Diving deep into the enterprise trading platform, commodity trade throughout the world is a 17 trillion industry, and over 80% of it, depends on financing. Obviously, about 70% is dominated by 4 or 5 major players like Cargill, Bunge. But if you look at all the SME traders, people who do small volumes like $1 billion a year, they struggle to get financing from banks. And this platform facilitates open account trading for people who are involved in trading. An open account is a simple solution where you're not dealing with letters of credit. You're basically just asking a trade financier to discount your invoices. This post-COVID, the trade financing gap in the commodity industry is over 3.4 trillion. So even if we get to capture 1% of it, it's a huge a huge validation for the things that we've been making. We have over 18 organizations who already use our platform. This has been live since 2020, and we have currently the number would be close to 170. And we have 4 countries where we have presence in. Basically all the trades that we have seen are more around soybean, palm oil, and agri commodities. But the platform in itself is very generic, where you can basically trade anything that you wanted. But it's more from an import and export nature, and we currently don't deal with the trading which happens inside a country, because this is mostly there for international waters. Because on the platform you can actually track the ship and where the shipment is going, and the last 20 ports that the ship has visited, do KYC AML checks on the counterparties that you're trading with, and all this data gets stored on chain, and then all the blockchain functionalities of immutability and transparency is what you get. This in turn benefits the traders to get access to better financing solutions. We are recently tying up with multiple trade financiers who want to leverage this transparency to kind of lower their risk and provide better rates to the traders. The ShipFi, like I was explaining, collateralized assets. These are financial assets. The first platform was more about the commodity itself. This is where we are trying to tokenize the fund, where they get to invest into a stable dollar-based yield. I'm sure you guys would know how Celsius works, and probably a little bit of centrifuge. It's very similar to that, where even no matter if it's a bull or bear market, so much wealth got created in the crypto market last year. So a lot of these people would be looking to get stable token yield, which is based on real world businesses and financing. This platform will enable all of us retailers to get access to such funds which which not really accessible right now. So these are our current 4 offerings, where we have creation of synthetic assets, a synthetics exchange for trading of these assets, a tokenization of real world assets, and we will roll out lending in a couple of months, so that people can facilitate lending and borrowing of stable tokens, which is fully collateralized lending. Towards the end of the year, we'll see a little bit of uncollateralized lending as well for people who are into DeFi. You can take an uncollateralized loan and provide liquidity to different platforms like Comdex, or some platforms in Terra, where you can just get a DeFi yield based on the loan that you've gotten here. But that's more of a experimental nature at this point. For people, what are synthetics? Synthetics are, like I said, think of them as perpetual futures, where you don't really want to own the actual gold which is underlying, but you just want to take the price exposure for it. So this way, synthetics help in a lot of ways because you're not worried about the security, you're not worried about, transportation. You're just speculating on gold, and when you're done, you just convert back to the, other Cosmos tokens and, take your money back. So we facilitate this on chain. All the liquidations and auctions that happen on the collateral work automatically on chain. If someone has a lot of liquidity, they can just wait for these auctions to occur where, if the collateral prices are dropping, people can actually buy these collaterals at a cheaper price and, sell it off on a different exchange as well. And it should just result in a 5 to 6% profit without any risk. All our assets are fully interoperable. We don't believe, to keep all the things only on our chain. We're based on Cosmos, so all our assets can actually move around any chain on the Cosmos ecosystem. Our Ethereum bridge is live now as well, so our assets can technically move to Ethereum as well. Although that's like very new, so not fully advised right now. But towards the end of the year, we'll be seeing a lot more ecosystems getting added. Terra is a very big ecosystem in general, which is also based on Cosmos, so and it's fully interoperable with Terra as well. UST, which is Terra stable token, can now be used on the Comdex chain as well. So this interoperability, currently through Cosmos, we'll be making it more, interoperable to other ecosystems like AVAX. Matic is another big target that we will be fulfilling before the end of the year. C assets are the synthetic assets that we call them. Yield generating vault, it's a concept again that we saw. Whatever collateral that you're providing on the platform, you can actually earn yield on it because now with liquid staking in place, for proof of stake ecosystems, there's a concept called staking where you lock up your token to earn yield. Instead of locking that token up on a validator, you can actually take a derivative of that locked up token and use that as collateral as well. This means that your effective rate of borrowing is actually tending to zero because you're not taking a borrowing risk at all. C-Swap is our ecosystem DEX where all the assets on our ecosystem are like interchangeable with other assets. And that happens through a very big liquidity pool that we have. And I mean, in terms of the growth potential, commodities, of course, 17 trillion market. The whole of crypto is just 2 trillion at this point. So we believe we are very early in the space. And certainly, as the more number of commodities grow and access to this increases, we will see a lot of commodity trading happening on chain in the world as well. This is our yearly roadmap. The text is too small, but primarily launching the DEX. Feel free to check out the demo at our booth. We already have a demo version live on our testnet, so feel free to check that out. ShipFi launched towards the end of the year, and for trade settlements for all the institutional traders, we will have our own stable token towards the end of the year, which they can leverage to do instant cross-border settlement. Like I said, built on the Cosmos ecosystem, we have all the top validators since we've been around in the ecosystem for a very long time. And yeah, we have advisors both from the centralized finance world as well as the crypto worlds. Very good legal advice from Dentons. Yeah, this is pretty much it. Thank you guys. Open for questions, and please feel free to meet us at the booth around.